we are in the thick of earnings season, right? Let's talk about Anand Rathi Wealth now that has come out with its numbers and, a strong set of numbers that have certainly come out from the counter where you're seeing a 36% revenue growth for the private wealth business. You're also seeing a profit after tax up 34% to come in at 40 crore rupees. So what's the roadmap going forward? We were just talking with Nitin Kamath of Zerodha just a short while back, talking about the drop in the demat accounts, etc. He was talking and indicating towards maybe private wealth management being something that they're looking at. Joining us to talk more about the earning fine print of Anand Rathi, it is Mr. Anand Rathi, the chairman of Anand Rathi Wealth, as well as Feroze Aziz, the deputy CEO of Anand Rathi Wealth, who are joining us on the show today. Mr. Anand Rathi, I'm going to begin with you. Good set of numbers with both revenue as well as the bottom line registering a growth, mid-30s, to be precise, 35% odd. Walk us through the quarter, the key drivers for the kind of growth that you've seen.
So obviously you've seen there is a significant revenue growth. As you have seen, 36% revenue growth year on year compared to last year. And this has been contributed by a larger number of clients, also the larger number of relationship managers, larger amount of inflow in this quarter. So all these things together have obviously added the larger revenue, which is reflected in the such a significant increase in profits.
Okay, Feroze, hi, good morning. This is Anisha also joining into the conversation. Now, AUM this quarter has gone up 15% on a year-on-year basis. But going forward, what kind of growth rate should we expect and any target figure you have in mind for the assets under management?
I think from a perspective of AUM has several legs of growth. The 4 legs of growth on AUM. One is the increase in the market value or the underlying assets itself grow. That generally happens because portfolios grow by 10-12% a year. That's how the assets are poised. The second leg of growth is existing clients consolidating their monies with us, especially during the last quarter, which is the June quarter. Markets have not done too well. So the respect for a good wealth distribution outfit goes up. So that's consolidation of existing clients' wallet share. That's the second leg of growth. The third leg of growth is new clients whom we onboard as references from the existing ones which are satisfied. And the last leg of growth is the new RMs we add, the relationship managers, which we currently train under the head of account managers who get to be promoted to be RMs. So these are the 4 legs of growth. This, according to us, all these guns should fire. Of course, the last quarter, the market movement has not been supportive. In spite of that, we've had net inflows, substantive portions of that coming in from existing and new clients. So to answer your pointed question, what kind of growth in assets under management you could see across all these 4 heads aggregating to 20-25% is surely something which we gun for.
Okay, so 20-25% growth when it comes to the asset under management. But Feroze also wanted to pick your brains regarding the entire private wealth industry. It continues to be fairly under-penetrated in the country. Could you talk to us what's the number right now of penetration and how are you assessing the overall market sentiment?
Yes, so you're so right that wealth management outfits, we as wealth management industry have not been able to penetrate so much because we are a nascent industry and we are the formative years. From an investment standpoint, we historically as a country have had affinity towards physical assets, both real estate and gold. There seems to be a huge influx of money from physical assets to financial assets because the kind of compounding benefit financial assets can provide and the liquidity is being respected as we go through this paradigm shift like the emerged economies have already gone through. So the penetration numbers to my mind are very low. In the segment which we operate, which is 5 to 50 crores, there I would be able to throw some light. I would say I would be surprised if the penetration numbers would be anything greater than double digits. So that's the kind of potential. 80-90% of potential exists, only 10-12% of penetration exists. And I think the pie the expansion of the pie becomes a huge opportunity over years and decades for a firm like us.
Now, given that the new client addition and the net flows have been fairly strong in Q1, the June equity flow saw a dip of 16%. After assessing these data points, what is the outlook in terms of the trend going forward, Feroze?
So from our perspective, the pointed question like the equity flows at Anand Rathi have always been negatively correlated to the market as well because we season our client base with the behavior how equity goes through, right? Last 20 years, equity has shown peak to trough correction every single year of an average of 20%. So if a person is seasoned to expect this, when the market corrections happen, there is more affinity towards the asset class and more influx comes. Of course, the last quarter numbers have seen some dip, but if you see retail money as a proxy to the sentiment, SIP numbers have been very robust. 16 consecutive months you've seen increases. So we think this time the kind of secular money which is coming in is on the back of great education which has happened because of SEBI's great initiative which began on investor education in 2013. So that's point one. Point two, these are great opportunities to invest and that's what an investor realizes. Especially in the pre-COVID and after the COVID falls, quite a few HNIs who were very skeptical went out of the market and then they realized to not repeat the same mistake in the current kind of small corrections of 12-14% which have happened over the last 6-8 months.
All right. Going forward, what is the outlook finally on client acquisitions? Is that going to be the key for growth at Anand Rathi? Help us understand the client acquisition trends and what exactly the data points are suggesting.
Yes, from a client acquisition standpoint, we being now a listed company brings in a certain degree of kind of believability and kind of perception of governance and the high governance and transparency that results in a larger catalyst to client acquisition. That's what we see in the last quarter. You see that there is a 30%, 40% growth in the rate at which we were adding clients last year to this year, owing to the kind of branding which you get in this business. That's point one. During bad times, our clients seem very satisfied because we measure both sides of the coin, risk and return. When there are satisfied clients, they have a tendency to refer us to their friends who are again HNIs in our segment of 5 to 50 crores. These two factors have helped us move up 30-40% at the rate of client acquisition. And we hope and we're putting effort to make sure that this further goes up and is not a flash in the pan.
And in addition, actually, we also have very little loss of clients. As Feroze has been saying, we have really very, very satisfied clients. So we get more references and we don't lose clients normally.
Okay, thank you so much for joining us live right here, taking us through the results. It's always good catching up with both of you. We're going to move on now and talk a little bit about the macros as well. For the 6th straight month, inflation has remained above the RBI's upper tolerance level.